Hello everyone. Today we're going to be doing a video that I want to share with you guys. I feel like this is actually long awaited. I was talking to my social medias about it, so I just want to kind of bring it to YouTube to just make a more in-depth video about it, how to spot your higher probability demand zones or supply zone. In my opinion, from what I've experienced, what I've back tested, what I have forward tested, all of the things, I feel like that this is something that very much helps me when it comes down to picking which zones that I want to enter, and I feel like that it could possibly help you guys too. And for those that may not know, I trade supply and demand, and that is the only strategy that I trade. I love to use support and resistance, not for entries, but more so analysis of the market when trying to figure out what levels I need to avoid, what levels I need to kind of back off from until I see how price pretty much reacts from them. But that's neither here or there. What is it? What is a higher probability setup? In my opinion, a higher probability setup is something that I feel 100% about. If you guys have been on your trading journey, you know that every setup is not technically 100%. Even though it may be valid, even though it may be holding, you don't really feel 100% about everything, and that is okay. But when I started doing this kind of made me feel a little bit more comfortable, and it made me start to feel 100% about things. And when you feel 100% versus 70% versus 50% about a trade setup, your outcome is way better, of course. This is what I feel like is something that will help you kind of spot your higher probability zones, because sometimes the market can continue to push up and have an untested zone, and it have these zones with orders that are unfulfilled. So eventually price is going to react like a magnet to that zone. It's going to want to come back down, retrace that higher probability zone, and it will give you more push power when you're entering. Go ahead and get into this video and just show you guys what I think and what I have been up to. Let's look at some examples. So let's start off with gold. Gold has been moving absolutely gracefully these days. I've been loving gold. If y'all follow my socials, which I'm a ping right here on the screen, if y'all have been following my socials, y'all see that I've been taking gold pretty recently, simply because NQ has been very manipulative lately, and I just wasn't really a fan of the price action when you have another asset that is moving like everything you want. What I do after I do my analysis of the market and I hit these hot spot time frames, which is the daily time frame, the 4 hour, the 1 hour, what I'm looking for on these time frames, I'm simply just looking for any type of support and resistance. I want to know where is the flow of the market, how is the market flowing when I'm looking at these bigger time frames. When I find that, the only thing I want to know is one of two things. Should I be on the buy side of the market today, or should I be on the sell side? And after I've done that, I figured that I wanted to be on the buy side of this market, but this is how we basically kind of find our entry and find out the zone that we want to enter on. Because like I said, the market is very prone to just moving up, leaving zones untested, not coming back for you, and it will make you enter in on zones that could possibly be liquidity, or it could possibly fall through. So this is kind of how you avoid that. So what I do, I take my entries on the 5. You guys know that I love the 5 minute for my entries. It's my comfy, it's my safe spot. I love everything about it. But I need a big brother time frame. I need a big sister time frame. So I go to the 15 minute. So what I do, the same strategy that I am looking for with supply and demand, you find your break of structure, you're waiting for price to come back and retrace, all of that. I'm basically looking for that on the 15. So I'm looking for my demand zone on the 15, and then I go to the 5 minute time frame and I find an untested candle within that 15. That is the secret. Look, check this out. So let's put this on the charts. So if I am waiting for a break of structure, I see we got a minor break of structure here, but I want to actually cancel out the possibility of this supply zone being here. It's kind of in a weird spot because you have two different things on the screen at one time, right? You have a break of structure, a minor break of structure here. Therefore, you have a demand zone down here at the bottom. But we're right here under this supply because price has also just broken these lows recently. So we have a very valid supply there. So what I'm going to do to cancel out any fear in my mind, any type of anxiousness, any type of unclarity, any type of blurriness about this trade setup, we're going to aim for this high to get broken. Okay, we're just simply looking for a regular break of structure. This is on the 15. In the event that the 15-minute breaks our structure to the upside, breaks that high, we can go ahead and find our demand zone. Your demand zone will be your most recent bearish candle before that break of structure. So let's just see. I'm going to go ahead and forward this, and boom. As you can see, the market gives you exactly what you want. We got a break of structure to the upside. As you can see, all of these candles here are green. They're bullish. Okay, so it's letting you know you only have this one bearish candle here at the bottom. So this is on the 15. What you're going to do, simply box this out. This is your demand zone, right? So think of the 15 minute as your highlighter. If you're reading a book, okay, so think about it like this. We're in high school and we have a quiz. And on that quiz, it's an open notebook quiz, right? So we see the questions. Okay, the teacher is asking for this, this, and this. While I'm reading this book, I'm going to use my highlighter to highlight the answer as I'm looking at what I'm reading. As we're looking at the candle's print, we're going to highlight our answer. So when we go to the test, we can know exactly what answer to plug in on that number or question. Does that make sense? So as we go to the test, which is our entry, which is our 5 minute, we know exactly is highlighting the answer for us. The answer is right there. So here, this is what you do. You have these two options. You're like, okay, now I have the 15-minute demand zone and I see two possible demand zones here. Where I go from here, I would not mark this one out because for two reasons mainly. For one, this candle is not the most recent candle since we have this 15-minute zone. For two, this candle has also already played out. You can see that this candle has pushed up, it pulled back, and it played out. It made it to newer highs, right? So I would simply mark out the most recent untested zone closest to this 15, right? Which would be here. Top wick to bottom wick, and I'm also going to include that green candle wick simply because it's longer than that red candle, so that would be the makeup of my zone as well. So now you can see that this zone is untested. You have unfulfilled buy orders down here that price is going to react like a magnet to. So this is going to be your higher probability demand zone. So I'm just going to label that higher probability demand zone. HPDZ. Okay, so that's what we're looking for. Man trader, this is what I feel 100% about. I feel absolutely 100% about this simply because price has not come back here yet. And a lot of supply and demand traders, they just continue to go with the flow of price. Not saying that you shouldn't, it's just lower probability. If price were continuing to push up from this higher probability zone down here, I would feel a little bit indifferent. I would probably, like this for example, I'll probably feel about maybe 80%. Even though it's still valid, I just feel lower probability about it. It could possibly hold, it possibly could not, because you got to understand price is trying to get back to these unfulfilled buy orders. So when they fill them, they're going to have to invalidate this to get there, and then we're going to go up to new highs. So let's just see how it plays out. This is somewhat so this is a little after market open. I just feel like it pays very, very well when you are very intentional and strategic with what you're waiting for. So I don't know, that's just what I've seen so far. So let's just see what price acts like at this demand zone. You can see that it completely invalidated. Past me back then, I would have been like, oh, price has literally just broken this low right here, therefore we have a supply zone, which could also be very, very valid. But if you were waiting for your sniper entry, waiting for price to simply come back and tap this zone here, you know exactly what's going on. Now we're going to be waiting on our confirmation entry. So even though we are not canceling out the fact that price had to break a low to get to our zone, we're always going to wait for something conservative. That's what we want to do. That's our goal. So we're still going down. That next candle came out bearish. We're still going to wait because it's still holding pretty nice. There you go. There you go. Mind you, this is the zone that's higher probability. you have a big brother time frame looking out for you. So imagine you're trying to do something and you have your big brother or big sister helping you. They're going to give you that extra push. So this is also something that I like to do. Let's just say that this candle had about 3 minutes left on it and it haven't quite closed bullish yet, but it looks like it's pretty promising and it's about to close bullish. I would simply go back to the 15 and look and see how the 15 looks. Price has not only closed bullish from the 5-minute, but we also have closed bullish from this 15-minute. I'm just going to delete this for now. This is that 15-minute zone that we have marked out. Price has just closed bullish from that zone. So you know what that means? That means that this is about to absolutely go crazy, okay? So obviously we will go ahead and take our entry. We will go long here, conservative entry, and I will use the full zone just in case price want to maybe come back and kind of play in it. And we could probably try to go for a 1 to 3 on this move. Let's try to go for a 1 to 3. Typically I'm pretty satisfied with like a 1 to 1, or on a really good day maybe like a 1 to 2. But because of the simple fact that we have this bigger 15-minute time frame zone on top of this 5-minute, this is very high probability, and this is something that could potentially go crazy. So let's just see. We just watch it go crazy after that. I'm absolutely not even worried about that supply. Price should completely break through it because this is a higher probability zone. And there you go. That's literally it. So unreal. And it's just so amazing how trading can completely change your life if you literally just learn these little candlesticks. Figure out what they mean, study them, back test them, actually put it into place when the market is open. It's just so surreal to me. Like, it's just so, and just really just lock in and just really like practice and study and stick to what you know and be willing to learn, be adaptable. And it still shocks me to this day because I'm really cold at this stuff. Like, I'm really cold at it, for real. It's about 14 points, but if you wanted to maybe manage your risk, current candle stop would have been suffice for this. It would have taken about 3 points off. So that's not terrible either, but hey, this would have been a nice opportunity to scale in. And as price is going up from here, passing that previous candle body, that would have been really tough. That would have been a nice trade to take. That was about 44 points. I'm just saying. Of course, I do feel like you have to have a trendy market when you are doing this. If you do not have a trendy market, probably more than likely will not work, honestly, because of course those pullbacks are necessary. You have to have those pullbacks. If you don't have those pullbacks and you're not working in a trendy market, this probably will not work because you need highs and you need lows to get broken. That's why I feel like it works perfectly with supply and demand, in my opinion. Okay, so this is another setup. This is another example. This one is going to be for a supply zone because I just want you guys to see how both ends look. This is, of course, this is the same thing that can work for a buy position. This is also the same thing that could work for a sell position. So with that being said, let's go ahead and do a sell position for this exact same little new strategy that I'm trying to lock in on. This is on the 15, of course, right? We've already went through our daily. We saw our 4 hour, our 1 hour. We can pretty much see how price was breaking highs. It was pulling back. It was shooting up higher. And then we saw this big fall. So from there, if we are paying attention to what current price is showing us and what price action is showing us, no indicators needed. Babe, we saw that these lows got broken. And of course, it wouldn't really make sense for me to go along with the buys. If I'm a scalper, I need to look at exactly what current price is doing. So yeah, I'm going to sell. If price is breaking lows, we're going to sell. And we're just going to, of course, just confirm that we're breaking lows before we get into an order. So to do that, all we're going to do is set out a simple finish line. I want the sellers to break this low for me so I can find my supply zone. This is on the 15, of course. So once you do that, you're alleviating any other possible thing happening. If I see a low get broken, of course, we have a supply zone. So let's see. Boom. Price ends up breaking these lows. We have a supply here. Most recent bullish candle before your break of structure would be your supply. Top wick to bottom wick. I'm including that red wick as well because it's significantly longer than that green wick. So that will be the makeup of my zone as well. So this is on the 15-minute time frame. Mind you, we don't enter on the 15, we're just using that to highlight our answer. So when we go to our test, hashtag our entry, we know exactly where to aim for and where our higher probability supply zone will be. Now we're going to go to our 5. Now we're here on the test. What is the answer, class? Oh, the answer is this green candle right here. So anything else that kind of pushes down after this, I'm going to feel lower. I'm going to feel less and less confident about it, because this is my higher probability supply zone. Okay, and I feel 100% about this. Simply put, I feel 100% about this one. So anything else that kind of pushes down, not saying that it's not valid, I just feel less probability, honestly. So as you can see, price is kind of pulling back here. In the event that it maybe falls down and breaks structure again, I'm not really considering taking it because I'm waiting for this higher probability supply zone. As you can see here, price looks like that it has came up and is trying to break these highs. I know a lot of supply and demand traders may be marking out this demand zone, which is very, very valid, because you could easily get into this order with the minor break of structure setup, and I sometimes do this too. Just all depends on if I feel like waiting, if I feel like being on the market for this long, honestly. There we go. Price came pretty deep in the zone, but it's holding. I mean, I do like that candle wick. Do you see, like, it came kind of deep, low-key, almost invalidated, but we didn't quite invalidate yet. So yeah, I mean, it's holding, it's still valid. I mean, if this is just like if this could come this deep in the zone, and this zone is rejecting, is holding, is pushing price down, is catching that momentum that the buyers are really filling up to that, and it starts pushing, you got a good one. Okay, so right after you get your bearish candle closure, of course, you will go ahead and fill your order. You see that everything is happening the way you want it to. It looks good. So what I would do here, I would simply use current candle stop to manage my risk. Why am I using current candle stop instead of using my full zone? Simply because this is my ticket to go ahead and get on the trade before it probably drops, probably melts in the market. So since my ticket is here and I don't want to bypass my ticket, I want to go ahead and get on, but considering that the 15-minute did not close bearish doesn't mean that it's never going to close bearish, and it may come up and invalidate. The thing with this, we're going to go ahead and take our entry on the 5 because I enter on the 5. I enter on the 5. I don't necessarily enter on the 15. The 15 will give me more confidence on the confidence that I already have about this higher probability supply zone. But just in case, I'm going to go ahead and manage my risk, and I'm just going to use current candle stop, which is right on the top of this bearish candle closure, simply reducing my risk from a potential 8-point zone to 4 points. Let's go for like a 1 to 3, how we did on the last time. So we can go for like a 1 to 3. And let's see how this plays out. Like, the risk to reward is absolutely crazy. I feel like you can't beat it. You're risking 4 points to make 12 points. So let's just see how this plays out. It's looking pretty good. It's coming out hot. It's invalidating all of these possible demands when price was breaking structure to the upside. And you see we're going there slowly but surely. And here comes TP. Okay, it went a little lower, but of course, we're not greedy. We just hit for a 1 to 3, 12 points. I mean, you cannot beat that. It literally is just that simple. That's literally it. So it's literally that simple. That's what I've been doing for the past few weeks. I really, really hope that this helps somebody, and I pray that you guys get it and it somewhat clicks. I know that it definitely helped me, and it literally turned my P&L calendar around for the better. Definitely showing growth. I feel like I'm definitely growing from implementing this along with my supply and demand strategy. I absolutely love it. Absolutely love how trading is a tool that nobody can take away from you. The more you study, the more you're doing yourself a favor. You're just only sharpening yourself. And I feel like everyone can learn from each other. Iron sharpens iron. So I don't know. I just want you guys to try it out, back test it, maybe forward test it, paper trade it before you do your live capital, and get soaked in for real. You know what I'm saying? Before you start trading your live capital, because even though this is new and you may get it, I always feel like paper trading something first when you're doing something new is always the best. You want to give yourself grace to make mistakes. You want to give yourself time to get it, and it's not a money grab. It's not a get rich quick thing. You definitely want to take your time, be graceful. Hope you guys are having a great week, and like like always, be safe, be blessed, and I'm wishing green days on everybody. Bye.